Welcome back. It's now the finance section to the Maple Finance Show. So, you know the rules. Put on your Patagonia vest, okay? Pop in, an upper decky, a little chino. Better not be 3 millis. I've always said this. But let's get right into it. So, as you know, the Fed statement just came out, the Federal Reserve. And are they cutting rates? Nope. Nope. The economy is doing too well and inflation is still too high. You are not getting that rate cut. Basically, all they're saying is that until they can see it hits the 2% target, they ain't cutting shit. They ain't cutting shit. The economy can go down the drain and they won't cut shit. Don't because, CPI has been creeping up a little bit more. It went up a little higher than expected last month. And the Fed's kind of scared. They don't like that. They're saying that, it's still too early. They're scared about either cutting too early or too late. Which, in all likeliness, even if they start cutting today, you won't feel the effects of that cut for another 6 months. So in reality, the economy, think about in 6 months, is the economy still on, steady ground? Probably not. I honestly think that we're probably nearing, it's going to be a recession close. I think they need to start cutting soon. It's, I think May is definitely too long. But if they cut rates now, you do a slow decline. You don't need to drop them at 100 bips at a time. You don't need to do that. You could start, dropping it at a quarter point. It's fine. You're at 5% right now. You got inflation ticking back up. I don't think inflation's going to go that much lower. The only way inflation goes down to that 2% target is literally if the economy starts to decline. That's the only way. Wages have been up. Prices are sticking up. Companies are not going to reduce prices. And, if you include oil and food prices, they're oil's staying there. Because demand's still up. The economy's doing too well for inflation to go down. So this is what they have to do. They have to either slow the economy and then cut it down right before, it's such a precise amount of cutting that they have to do at the perfect time. They're gonna miss it. The soft landing isn't gonna happen. It's gonna be a hard landing. It's gonna be bad. Here's what's gonna happen. At some point, CPI is gonna fully miss. I don't know. Manufacturing, all of this consumer spending data are going to come in super below estimates. They're going to panic. They're going to start doing massive rate cuts, massive rate cuts, but it's going to be too late. And then it's going to be like 2009 all over again. But, for now, we're chilling. They're going to keep it at 5%, whatever. They won't cut until they see that CPI going down. So here's what you got to do. If you want inflation to go down, you got to start taking a wage cut. Go up to your employer and go, I'm helping the economy lower my salary. If everyone took a 2% salary cut, inflation would go down. Guys, this is just how it works. Go up to your employee, go, pay me less than minimum wage. Pay me less. Because I need to help the economy. Anyway, Jay Powell, he seems to get tired. He's getting tired about people asking him questions about these rate cuts. He goes, they're saying, yeah, we'll cut it in May. Stop asking me about it. Stop asking Powell about, all these rate cuts. They'll cut it at some point. They'll cut it when it's too late because the Federal Reserve is great at predicting, the economy collapsing. It's fine. Anyway, so that was the Fed statement. Canada, too, they're holding their key interest rate benchmark. They're keeping it stable. No signs of cutting anytime soon. So that's just what we're going to stay in anyway. So stay with it. Ignore the fact that, the interest, the yield curves are inverted. Just ignore it. It's fine. They'll just keep interest rates up there. Speaking of the economy being super healthy, mortgage delinquencies in Canada are up 50% above pre-pandemic levels. In Ontario, they're up 135%, and in British Columbia, up 62%. So, you know, the real estate market is doing great in Canada. But here's the thing about the Canadian real estate market. It won't crash ever. The real estate can be in the biggest bubble ever, and the best it'll do is plateau. In 2009, I think prices barely got touched. Prices probably either stagnated or went up in 2009. The Canadian housing, you know, the real estate market cannot crash because there's simply not enough housing. There's just too many people and not enough housing so that people will pay whatever to keep their houses and get new houses. So you can have these mortgage delinquencies up. Well, you know, it's because you raise the interest rates, the mortgage rates, like, you know, they skyrocket. And now people are coming back after, you know, they have to renew their interest rates, right? So they were paying whatever, a 1% mortgage rate in 2020. And now they're coming back. What the hell? My mortgage payments are going up $500, $800, $1,000 a month. What am I going to do? And this is why you see in Ontario and British Columbia, literally two of the highest, you know, housing prices in Canada. And people are just, you know, they're not paying. They're like, I'm not doing this. I can't afford it. Am I going to eat or am I going to pay, you know, my mortgage? That's what happens. And then also, people who have mortgages, turns out bankruptcies are now up 23% Canada-wide and up 76% in Ontario and 47% in British Columbia. So these are people with mortgages who are declaring bankruptcies. This is also up above pre-pandemic levels. Turns out when there's no more stimulus and when interest rates go up by, like, you know, 5x, you won't be able to afford it anymore. Is this going to collapse the entire housing market? No, it might collapse the economy, probably. This is not a great sign for the economy. But, you know, will it crash the housing market? No, because, you know, they keep bringing in new people, and those new people need to buy houses, and they'll need to rent out apartments. So you'll just have more and more homeless with the same amount of houses at the exact same price. The whole reason why prices skyrocketed, besides the mortgage rate, interest rate increases, was because Canada just keeps bringing in new, you know, they keep bringing in high-skilled immigrants, right? And these high-skilled immigrants get, like, high-level jobs. They're engineers, they're doctors. These people are now flush with cash. So if you double the rate of immigration of these high-skilled people who are needed, listen, I'm not saying they're not needed. They're needed. We need more people. People aren't having kids. So we need to bring in all these people. What do you think is going to happen? You have double the amount of immigration. If you look at a trend of Canadian immigration, right? It's stagnant, stagnant, stagnant. Past 3 years, it's gone up to 500,000 a year, basically. So, and then housing prices goes up at the exact same time. What do you think was going to happen? You like triple the amount of people coming in. These people have a lot of money. There's only fixed number of houses. You're only building 1,000 houses a year. What do you think is going to happen? And now you have all these people who got these big houses at super sky-high prices, but their interest rates, you know, their mortgage payments are quite low because the interest rates were low. But now, you know, 5 years has gone past, 4 years has gone by. It's time to renew. It's a ticking time bomb. What do you think is going to happen when your mortgage rate increases $1,000 a month? What did you think was going to happen? But yeah, you know, you've got a lot of people renewing. You're renewing this year. They'll start renewing next year. So the next 3 years, it's going to be ugly. It's going to get bad. But no, don't cut inflation. Don't cut the interest rates. We don't need that. The economy's chugging along just great. People are doing great. But yeah, if you cut the interest rates, right, mortgage rates go down, and now people can afford more houses, right? No, it just means the prices will go up. It'll all even out. No matter what happens, you won't be able to buy a house. Too bad. Too bad. Live with your parents. Too bad. I don't care. No one cares. Nobody cares that you can't afford a house. Nobody cares. Everyone thinks, you know, it's because the interest rates. No, it's not because the interest rates. It's because there's not enough houses. This is why Pierre Poilievre, he's going off. He's going, guys, we need to build more houses, blah, blah, blah. Well, yeah. But even if you start building houses now, you know, it'll take at least 2 more years. And you gotta build a lot of houses. You gotta build a lot of houses. It's not easy. It's not easy to fix this crisis, but no matter what happens, the economy could be in the Great Depression, and yet housing prices will stay stagnant in Canada. We're not like America here. We don't have enough houses, and you're gonna freeze to death. So if you don't have one, you're dead. So, you know, the housing is not gonna move. I don't care about how much delinquencies are up. It's fine. The banking sector is going to be fine. There won't be bailouts. You'll just be homeless. It's okay. Get a tent. It'll be cheaper. Speaking of, you know, the banking sector collapsing, we spoke yesterday about New York Community Bank, about how their stock was down, whatever, 20% because of, you know, some bad loans. Guess who's down another 40% today? And the stock got halted 3 times today. Turns out New York Community Bank is looking for a cash infusion. Turns out a lot of their bad loans are really bad. And people are, you know, they heard that they got downgraded, and people are hearing about this and like, maybe let me take my money out. Something is not going great. So now they're looking for a cash infusion. Someone's going to buy them out. My prediction, who's going to buy them out? It won't be Wells Fargo. Wells Fargo, you know, they still capped about all that fraud stuff. Citibank's not doing too well. Is it going to be Bank of America, or is it going to be JP Morgan? That's literally the only 2 contenders. I don't think Bank of America will buy it. It'll probably be JP Morgan. There'll be a whole, you know, a whole spectacle at whatever. They'll say, you know, this anti-monopolistic whatever. And then they'll still let it pass. That's what's going to happen. It'll either be Bank of America or JP Morgan. They'll buy this bank. They'll make huge tax write-downs. They'll be like, all these assets are worthless. Everything's going to shit. If they don't get the cash infusion, the bank will collapse. 100%. Then one of these huge banks, one of those 2 banks will buy it out. All this distressed assets at like 20 cents on the dollar. They'll make a bunch of write-downs. They get a bunch of tax breaks. It'll be great for the big banks who buy it. All the people, good thing they're still FIDC insured, but, you know, the Fed will probably have to take up another $100 billion in assets, you know, to protect all this stuff. If they don't get the cash infusion. Even if they do, I don't think it'll be enough. It'll probably not be enough. These loans are bad. They're bad loans. There's a reason why Signature Bank failed. And if New York Community Bank, you know, if they start failing, it's going to do another huge regional bank things, and all the regional banks are going to tumble. And you know who's going to suck them up. It's going to be, you know, the big banks. It's going to be like the Cleveland Massacre, when Rockefeller bought out all the oil producers. It's going to be the same thing, except it's going to be Jamie Dimon going, thank you, and they're picking whichever one they want. It's, you know, it's not great for the competition. It's going to be bad. But I find it hilarious. Just, you know, you buy a shitty bank that just failed. What did you think was going to happen? You thought, what, their loans were pristine? What, you think they had, like, AAA loans? No! These people are probably the people who are giving out loans in Canada, you know, who have all the 135% mortgage delinquency rates, you know? No, of course not, but I don't know. This will definitely cause, you know, a whole thing if no one bails them out. If they do get the bailout, it probably won't be a government bailout. Probably not. My expectation, either a big bank's going to bail them out or just buy them outright. Or they'll wait till they collapse. No one will give them money. They'll wait till they collapse. And then they'll just scoop it up, get all these assets, get the tax write-down, and they'll be great. Yeah, so that's what's, you know, New York Community Bank, congratulations. Stock down 40%. If you're looking for a value buy, the bank probably won't go out of business. Yeah. Next up, we just got some new earnings. CrowdStrike just delivered spectacular earnings. The stock was up 30% yesterday, and it's up another 15% today. They reported 95 cents of earnings versus 82 cents expected, and 845 million in revenue versus 839 million. investors like this. You know, CrowdStrike's another one of those cybersecurity stocks, just like Palo Alto. It seems like Palo Alto was the only one out of this bunch that did badly. Okta reported they did phenomenal numbers. CrowdStrike's reporting they're doing great numbers. So why is Palo Alto doing badly? I think this was just a manufactured thing. You know, Nancy Pelosi told them, guys, this quarter alone, report really bad earnings so I can buy your stock on the cheap, you know, buy some call options on the cheap. And then the next one has stellar, absolutely stellar earnings. That's, you know what? Don't call me conspiracy theories, but that's probably what's happening. Because it doesn't really make sense that you have all these other companies in the same industry reporting beautiful numbers, like beautiful numbers. Speaking of, like, you know, their guidance, 902 million to 906 million in revenue versus 899 million estimated, and 89 to 90 cents versus 82 cents estimated. Like, these are good numbers. This is, you know, this is the type of numbers I want to see. Maybe the economy won't go to shit. We don't know, but at least, you know, you got good earnings from CrowdStrike. And this is what's very, like, this is great to me. They're saying they're reiterating their guidance for 2030, saying they want $10 billion in recurring revenue. This year they reported 3.4 billion in recurring revenue. That's a lot of growth. That's a lot of growth. So they're seeing this industry gonna massively rise, right? So what's Palo Alto doing? Did they just drop the ball for one quarter? Or did Nancy Pelosi, you know, guys, pull the plug, let me buy more. Next earnings do some real good stuff. Did that happen? I didn't say anything. It just seems, you know, suspicious. Is Palo Alto's management that bad? Is that really what's happening? Who knows? Who knows? All I know is that this is like the best news out of a lot of bad news today. This is a lot of bad news today. New York Community Bank is not doing well, and it's not going to be good. It's not a good rhetoric to start off, you know, the month with another bank failing. There's been too many bank failures that were not, like, that whole regional bank crisis with Silicon Valley Bank and Washington Bank, you know, these were not small banks, okay? These were multi-$100 billion banks that fully failed. They completely collapsed. And the market barely reacted. No one gives a shit about banks collapsing anymore. They're like, yeah, the government will just backstop it. The Fed doesn't need another $1 trillion in assets that they take over. They've been selling off all their assets. When the Fed balance sheet is $8 trillion, it's not a good sign for the economy. The Fed shouldn't have $8 trillion in assets. That's just a fact. Is it too late for the Fed to start cutting? It's not too late, but it seems like the economy's in a very shaky spot. You know, I think the stock market's overlooking a lot of things. They're looking over a lot of, you know, data. Oh, oil prices are fine, you know. Yeah, but there's a lot of things that are very shaky, and I think one bad earnings report really tanks the market. If one of the Magnificent Seven, you know, one of the big caps, report bad earnings, the entire market will collapse, for sure, especially if it's NVIDIA. I spoke about this last time. If Microsoft or Apple or whatever, you know, Google, they report bad earnings, the stock will tank 15%, the market, they'll take down the market with it. But, you know, the weirdest part about this market is that most companies in the S&P 500 are not doing that well. If you look at what provided most of the gains to the S&P 500 over the past year, it's like 90% the big seven. It was mostly NVIDIA, mostly Microsoft, Apple, you know, Tesla, and Google. It was mostly these big companies who were able to rise 40% compared to the rest of the S&P 500, which was down like 6%. Most companies aren't doing that well. They're doing okay. They're just hanging on. They've pretty much stagnated. A lot of these companies, their revenues and their profits have gone down since the pandemic. And here's the thing about the pandemic. You gotta stop blaming the pandemic about everything. It's like 3 years later. Stop. I don't want to hear in your earnings report saying, well, you know, the supply chain, because of the, you know, the post-pandemic supply chain. Enough. Stop using the pandemic as an excuse. Stop using the wars as excuses. You know, I think they're just saying that, you know, to make them seem better. But I think a lot of companies are on really shaky ground. New York Community Bank will likely trigger a massive bank failure, like regional bank failure, if they don't get this cash infusion. And they'll probably need $10 billion minimum to hold out. They didn't say how much they needed. But they were looking out for, you know, investors to put in money. Otherwise, it's JP Morgan's lunch. It's Bank of America's lunch. And they'll be happy to scoop it up. They'll be happy to scoop it up, get some good write-downs on it, because everyone now knows that all the assets are distressed. Because before New York, they couldn't really say that the assets were shit. They couldn't say it. They wanted to say, you know, we got this huge acquisition. It's going to be great. We'll become one of the big players in banking. Oh, then they look over all the loans and they're like, oh shit, all these loans are literally fucked. So that's what happens. But, you know, we've held off for another day. CrowdStrike, very good earnings. Palo Alto, keep it up. Next quarter, please do some good numbers. Nancy Pelosi needs more money. Mortgage delinquencies in Canada. This is a very troubling sign, but it probably won't do anything. It probably won't do anything. Maybe a lot of the big banks in Canada, which make up a large portion of the TSX, which is basically the Canadian S&P 500. A large part of the Canadian stock market is based off of these big 5 banks. You know, RBC, CIBC, BMO, Scotiabank, and TD, right? And a lot of these companies, they make a lot of their money, especially CIBC, makes a lot of money from these loans. These mortgages make up like 20% of a lot of their portfolios, which is not an insignificant amount. So their credit loss provisions are going to have to skyrocket. I think next quarter is going to be pretty bad for a lot of these banks because they're going to have to put away $500 million for credit loss provisions. So those stocks will probably tank, and I think the Canadian stock market will start seeing a little rut. But, you know, the housing market will be fine, and you still won't be, don't worry, you won't be able to afford a house, and it'll be fun. It'll be great. Just buy a tent. It'll be fine. And finally, you know, the Federal Reserve and Canadian, you know, Federal Reserve, they're not cutting rates. They won't cut rates anytime soon. Stop getting your hopes up. They're not cutting shit. You will not see a rate cut till probably May. And if CPI stays up 3%, you know, if they stay stagnant above that 2% number, if it's not going straight down, if it levels out at 3%, we're not seeing a rate cut for a while. So go ask your employer, tell them, you know, cut my salary, please. Start begging them. Go, I need my salary cut so they can cut down interest rates, right? That's, you know, I think that might be the only solution. Anyways, that's all I have for today. Thank you for tuning in to the Maple Finance Show, and we'll catch you next time.